Welcome in our guest. We have so much to talk about this morning. Charles Payne, WStreet.com, of course, is here, and Ron Davari from NewOak Capital is here as well. All right, what do you think, Charles? Boy, what a day yesterday. What a day.
Wow,
huh?
It's
You surprised by how bad it got yesterday? At one point, I mean, I think Ron and I were talking about it in the last hour, and I'm sure everybody's on everybody's mind today. It's like, all right, we woke up and found out that there were these sovereign debt concerns. We knew they were there for a while, and then you had jobs here in the U.S.
Yeah.
and
I don't know. It's interesting. I think
if
this happened on Monday, it wouldn't have been a surprise, right? Because the week before was really weak, really suspect. People were really nervous. January ended up being a bust. But, you know, we had these couple of good sessions, and it started to feel like, hey, you know, maybe it's not as bad as we thought. But it just seems like, to your point, we were reminded of everything, and that I think also this stuff isn't going away.
Yeah.
You know, last night I was on a lot of research, and, you know, you look up, like, you know, global debt issues, and you'll see stories going back to 2005 and 2004. So you're right.
Yes.
It's not news per se, but the solutions, there don't seem to be any real solutions, and I think that's what's scaring people.
Well, the urgency is different depending on which country you live in or which region of the world, isn't it, Ray? Is that fair to say,
yeah,
Ron,
very
depending
much
on
so.
where you are?
I think Portugal was a big issue because I think they were expected to raise about 500 million, and they only could do 300, and that was a very big disappointment.
Yeah.
You know, prior to that, Greece was actually managed to get what they wanted, but I think, as you know, as Charles was saying, it's like, you know that there is a final exam. You waited until the night before, and then wow, you look at the textbook and said, I got to read all this material, and what happens is that we recognize that there's going to be a huge amount of additional budget deficits that has to be financed.
But would a short-term political shift to focusing too much on that in developed countries, such as the United States, be a mistake right now, given how fragile the economy is?
Well, it's, on one hand, if you ignore it, then the bond market is going to react more violently, because as I think this happened yesterday, where you know, you had the jobs claims come in, obviously surprise, and then at the same time, you know, people saw, well, you know, we already had the easy picking last year, and now let's take some profit and then go after shorting, you know, perhaps some of these smaller countries' debt.
Right.
And you know what? The hedge funds, the people who are in the market, actually they welcome volatility in some ways.
Sure.
Because you know they
make a few bucks off it.
What is your alpha going to be this year? It's going to be essentially picking these trends, you know, and trying to go along with these long waves.
What about you, Charles? You're doing, obviously, like all of us, a lot of research, talking to people, looking up things that have happened in the past. What do you do preparing for today? I mean, is there a new change in strategy or anything from your group?
I'm kind of a little upset at myself. You know, we did some SDS. We told people to buy that as one of these ETFs that you make money on the downside, mostly as a hedge. You know, but I tell you, what I'm worried about is not professional traders, but the regular person out there, and I think I mentioned this last week. I'm starting to get a lot of phone calls and emails from people 55, 58, 60, who saw almost all of it go away, you know, last year at this time, and they hung in there.
Got a little back.
They got a little back, but now they sense it, they feel it, you know.
And they're going to bail again.
They don't know. You know, I mean, they're still down. They still see years of hard work gone.
Because I talk to the point the split between professional and regular people is a good one, because we'd spent a lot of time talking to well, pros like you guys, and I talked to a number of people yesterday. Said, yeah, markets wise, especially equity markets, yeah, you know, we'll see some sort of a correction, but boy, this could be a heck of a buying opportunity. And they might take advantage, and you think other people will bail out too soon.
I think it's some people, you know, it depends on where you are in life, you know, but I do see, that's why I said like 55 and older, that group is really just beside themselves. And I know, I think last week about $3.5 billion came out of mutual funds. Yeah. So we saw that last year. People started to take money out, and then it turned out to be a huge mistake. And that's what they're grappling with. They know if they would have sold last year at this time, it would have been a mistake.
Yeah.
But they also have no confidence in a lot of things going on with this country, fiscal monetary policy around the world. You know, you've got two socialist countries that are going down the tubes, and you know, our stats in a lot of ways are just the same as their stats.
Yes, but our ability to deal with those issues is much different. I mean, we're a much more developed economy. We can borrow money at lower rates and all these. That was my earlier point, is that to compare the United States, and I know we had the warning from Moody's and everywhere else, to compare the United States to Greece or to Portugal is Well, what is it? I mean, to me, it's
no,
unfair.
No, you saw that obviously. We had a good rally in our treasuries. Well, the Eurozone was not.
Yeah, we have
so
a guest
well.
coming on later in the hour.
Sure.
Now that you bring up treasuries, who's going to say that we've seen the top for treasuries, and now's not the time to be putting money into treasuries at all. But it still continues to file in there. Yesterday, as a safe haven. What about the U.S. bond market?
Well, it's very difficult to attack the U.S. bond market if you're a hedge fund or if you're trying to create volatility. But when you go into Greece and Portugal and Ireland,
right.
that's a lot easier to move things around. As I mentioned, this is all coming about how are we going to make alpha this year.
Yeah.
I think it's not going to be as much about the retail as it's going to be about institutional. Those guys are saying that, well, we got last year's bonuses. How are we going to make money this year?
Yes.
They're not going to make it by just being long and wrong. They're going to have to figure out, and the first quarter is probably the right time if you're going to be short, to put that short on, and maybe perhaps starting then harvest that
right.
later on in terms of going long again. So again, there's a bit of a technicality in terms of creating volatility for the sake of volatility and perhaps generating some
profits
trading.
that go along with it. But yes, as Charles says, there's a split between how people recognize that in a hedge fund and how normal people who are watching and
we
listening.
don't want to be too arrogant saying that,
at home.
that we're not Greece. I mean, it's just like human beings. They do experiments on mice to see how it might affect humans. Like even though we do have a much more robust.
But it's a timing question. It's a question of timing. When we have to start worrying about it, because if we worry about it too soon, if we start doing that now, when the economy is fragile, and we stop spending, and we stop, and all these people win their arguments, and now all of a sudden we're worried about fiscal situations and deficits, then what happens to the economy? And you have an unemployment rate that goes up significantly, not down. Then what do you do?
Well, again, there's a couple of schools of thoughts that all the stimulus hasn't really worked per se. I mean, if you think,
well, that's if you assume that things wouldn't have been a lot worse without it. I mean, this
or that there are other ways to apply the money. In other words, like all the money that went
to it may not
be
perfect, but the economies, the growth numbers in the economy are propped up by the government one way, shape, or form, either easy monetary policy or fiscal stimulus.
But the argument is for a lot of people is if the government would move out the way and that money was available, if there wasn't, it's a zero-sum game. You have a certain amount of money. The government's taking most of it. Corporations taking the rest. Big corporations. Right. There's nothing to really stimulate, or there's nothing available out there for the smaller guy, So, I mean, that's one of the arguments.
I like the small business program that the Walmart just this morning announced, because I think those are the kind of programs we should have seen perhaps even much earlier. I think it's not yet too late because the commercial real estate problems are, I think, ahead of us. And there is no financing available if you own if you're a mom and pop owning a building that you live in and you also have a store down below and you got to roll over a $1 million loan, and the banks are not going to lend you on that. So if you can actually get that from
I guess what I'm worried about, though, Connell, is America forgetting how to be capitalist. Right now,
no, I understand
all of the money going into housing, 95% of what is government backed. Do we want to get to a place where all the money that goes to businesses is government backed? In other words, if we pull back from the system that made us great, we got off track for a while, but if we can pull completely back from that, can we ever get back into it? Will we become a government, a society dependent on government stimulating
more European, which wouldn't be a good thing. A lot of people. No, I understand. That's a very good point.
We're far from becoming European.
A huge discussion, right? Well, thank goodness in many ways. No offense, Ashley, if you're listening. Speaking of Ashley, he's back now from London. Oh, good grief. Well, that was a good talk. I mean, these are huge issues, Ashley, and we haven't.